Welcome to Explain the Charts, and today, September 9th, 2025, we're putting Apple stock, ticker symbol Apple, under the microscope. The big news dominating headlines is Apple's iPhone 17 event, which just wrapped up, and the market's initial reaction appears to be one of cautious disappointment. Reports suggest Wall Street is unimpressed with what they perceive as only incremental upgrades, leading to a slight dip in AAPL's share price this morning to around $237.31. This reaction, while not a dramatic collapse, signals that the launch didn't deliver the breakthrough innovation investors were hoping for to spark the next big rally. Let's dive deeper into the news and see how these external factors are influencing the charts. We also have to consider persistent concerns around Apple's AI strategy, potential tariffs, and ongoing regulatory scrutiny, all of which create a complex outlook for the tech giant. These elements are painting a nuanced picture for Apple, far from a straightforward growth trajectory. Beyond the new iPhone, a significant headwind is Apple's delayed AI strategy, particularly the AI-upgraded Siri. This delay prompted Morgan Stanley to lower their price target on Apple stock from $275 to $252 back in March, revising down iPhone sales forecasts for 2025 and 2026. They cited the absence of a killer AI app ahead of the iPhone 17 launch, which diminishes its potential to accelerate upgrade rates. Another looming threat is the potential for new tariffs from the Trump administration, estimated to add $2 billion to Apple's costs, directly impacting profitability. While CEO Tim Cook noted some tariff-related pull-in of future demand in Q3 earnings, this remains a significant long-term risk. Furthermore, the Department of Justice's action against Google regarding search engine payments could cost Apple $18 to $20 billion in annual revenue. However, TD Cowen maintains a bullish stance with a $275 price target, believing Google's remedies are favorable for Apple's advertising revenues and expand its AI partnership opportunities with non-Google entities like OpenAI. This mixed bag of news creates considerable uncertainty and varying analyst sentiment. Despite these challenges, Apple's financial health remains robust, as evidenced by its fiscal third-quarter earnings report released on July 31, 2025. The company exceeded guidance with a strong 10% year-over-year revenue growth, reaching $94 billion, driven by solid iPhone and services revenue increases. Morningstar, post-earnings, raised its fair value estimate for Apple from $200 to $210 per share, deeming the stock fairly valued with a wide moat rating. The consensus from Wall Street analysts remains strong buy, with a median price target of $239.50, implying a modest upside from current levels. However, there's a wide range in price targets, from a high of $325 from Wedbush's Daniel Ives, who anticipates an AI-driven iPhone upgrade cycle, to a low of $175 from JP Morgan. This divergence underscores the market's divided opinion on Apple's future growth catalysts, especially concerning AI. Looking at the broader economic landscape, recent U.S. labor market data indicates a significant cooling, with a fairly weak August jobs report signaling a dramatic slowdown. This has led to expectations of a Federal Reserve rate cut, which could be a positive for growth stocks like Apple if it signals more accommodative monetary policy. However, investor concerns about the AI boom potentially disappointing continue to be a macroeconomic headwind for large tech names. Geopolitical risks also loom large due to Apple's heavy reliance on supply chain partners in China and Taiwan, creating vulnerability amid U.S.-China relations. The Chinese government's recommendations against iPhone usage for officials also present a tangible revenue risk. These macro factors introduce an additional layer of complexity to Apple's valuation, impacting both its supply chain stability and demand in key international markets. Now, let's turn our attention to the daily chart for Apple to understand its recent price action. From late April to mid-June 2024, Apple experienced a robust uptrend, climbing from around $173 to a peak of over $213. a surge likely fueled by broader market optimism and anticipatory buying. Following this peak, the stock entered a period of consolidation and a slight pullback through July, finding support around the $200 to $205 level. A significant rebound occurred in early August, pushing prices from approximately $202 to highs near $233, which strongly correlates with the positive Q3 earnings report released on July 31st. This upward momentum was short-lived, as the stock then traded sideways to slightly down, hitting a recent high of $241.32 on September 5th, just before the iPhone 17 event. The overall trend since May 2024 has been upward, but with noticeable periods of correction, indicating investor caution despite fundamental strengths. Key resistance in this broader view is around the $230 to $240 zone, with strong support forming near $200 to $205. The daily chart demonstrates a clear pattern of strong rallies followed by periods of consolidation, highlighting the ongoing tug-of-war between bullish fundamentals and macroeconomic uncertainties. Let's zoom in on the daily chart's most recent activity, specifically from early August 2025 to yesterday's close, September 8th. Following the strong Q3 earnings, we saw a clear upward move from the low $200s, establishing a new higher base around $225 to $230. The stock then attempted to break out towards $240, reaching $241.32 on September 5th, likely on optimism leading into the iPhone 17 event. However, as of yesterday's close on September 8th, Apple settled at $237.88, which the news today confirmed as slipping further to $237.31. This indicates that the pre-event run-up, if any, quickly faded as the market processed the unimpressive iPhone 17 announcements. The price is currently hovering just below the significant $240 resistance level, suggesting that this level will be a tough barrier to breach without new, more compelling catalysts. Conversely, the $230 to $232 range now acts as immediate support, having been tested and held multiple times in late August. A breach below this could signal further downside in the short term. Transitioning to the 1-hour chart, covering late August 2025, we can observe the shorter-term dynamics. In the latter half of August, Apple traded predominantly within a channel, roughly between $225 and $230, indicating a period of accumulation or indecision. Towards the very end of August, we see a notable upward push, breaking above this range and establishing a higher trading band, aligning with the daily chart's recovery after earnings. Volume spikes on these hourly charts often accompany key price movements, confirming the conviction behind the buyers or sellers. Specifically, the hourly candles from August 26th show a strong move from $225.26 to $229.30, with elevated volume, suggesting renewed bullish interest entering that period. The resistance at approximately $231 to $232 was tested multiple times on August 27th and 28th, acting as a ceiling before further data on the daily chart could emerge. Zooming even further into the 15-minute chart, we can examine the very recent price action leading into and around the iPhone 17 event. From September 4th to September 5th, Apple saw some volatility, ranging from $237.29 to an intraday high of $241.32 as anticipation built. However, this upward momentum was unsustainable, and we observed a pullback through September 5th and 8th, closing the latter at $237.86, showing the early signs of investor skepticism. The relatively flat trading during after-hours on September 4th and early September 5th, followed by a surge during market hours, then a decline, suggests that major moves are still heavily concentrated during active trading sessions. Immediate short-term resistance is clearly visible around the $239.50 to $240 level, which was briefly touched but not sustained. Conversely, the $237.50 to $238 zone appears to offer some immediate support, though it's currently under pressure based on today's news. High-volume spikes often correspond with these rapid price changes, indicating active trading and differing opinions among short-term traders. Traders should monitor these intraday swings closely for potential entry or exit points, especially in light of the news that the stock has slipped further today. Considering both the news and chart data, the bullish case for Apple rests on its strong financial performance, particularly robust services revenue growth and high profit margins. The strong buy analyst consensus and long-term price targets from analysts like Wedbush's $325 suggest significant upside, driven by the belief in an eventual AI-driven upgrade cycle and its wide moat, protecting its market position. The TD Cowen outlook regarding Google's search business remedies also presents a potential positive for Apple's revenue streams. On the bearish side, the unimpressed market reaction to iPhone 17 highlights concerns about Apple's lack of immediate breakthrough innovation and its delayed AI initiatives, potentially slowing iPhone unit sales forecasts. Macroeconomic headwinds, including a cooling labor market and fears of an AI boom disappointment, combined with geopolitical supply chain risks and potential tariffs, add significant uncertainty. The current stretched valuation compared to competitors also makes it vulnerable to negative news or market corrections. For traders, this means recognizing that while Apple has strong long-term fundamentals, short-term volatility will likely be driven by news flow around AI development and ongoing economic data. Deciding whether to be bullish or bearish heavily depends on your investment horizon and conviction in Apple's ability to innovate beyond incremental upgrades. To recap, important price levels to watch are the immediate resistance around $239 to $240, which has proven difficult to break, and a more significant resistance at the previous peak of $244 to $245 from late 2024. On the downside, initial support rests at $237, with stronger support at $230 to $232. Corresponding to the post-earnings consolidation phase. A break below $225 would be a significant bearish signal, potentially pushing it towards the $210 Morningstar fair value, or even the $175 low analyst target. Our unbiased prediction is that Apple will likely trade in a range between $230 and $240 in the short term, with a 60% likelihood, unless a major catalyst emerges. A breakthrough above $240 would be reinforced by positive AI news or favorable macroeconomic data, indicating a potential retest of its all-time highs. Conversely, a sustained break below $230 is probable if AI updates continue to disappoint or if broader market sentiment sours, perhaps with a 40% chance in the short term. Investors should look for updates on Apple's AI development, any progress on tariff negotiations, the next earnings report for clearer direction, and overall shifts in the Federal Reserve's monetary policy. Volume accompanying price movements will be a key indicator of conviction, so monitor it closely. Always define your risk tolerance and trade with a clear strategy.